This is your economic review. Now, the Kenya Revenue Authority has released guidelines outlining the applicable corporation tax rates for the years of income 2020 and 2021. In a notice published by KRA Commissioner for Domestic Taxes, Rispa Simiu, resident corporates with accounting periods ending on or before 30th March 2020 have been advised to apply the 30% rate. However, such corporates will enjoy a reduced COVID relief rate of 25% for the income generated in the period 1st April 2020 and 31st December 2020. For income earned in the period on or after 1st January 2021, the applicable rate is 30%. Now, the lower rate of 25% was introduced in April 2020 as a tax relief to counter the negative effects of the COVID-19 on business and employment incomes. Now, the KRA Domestic Taxes Board added that the process of enhancement of the iTax system is already underway to incorporate this interpretation. All right, let's understand the different accounting papers contained in the different rates, and to help us go through that, we're joined by Linda KANYARI, who is a KRA tax expert. Ms. KANYARI, good morning.
Good morning, Simba. It's a pleasure to be part of the panel.
Pleasure to have you around. Yes.
Thank you. And just to demystify the public notice that was sent on the 19th of January.
Yes.
We saw the rates at 25% during the COVID period, and this was used to kind of ease on the tax and on the taxpayer. And we saw the same apply on the individuals as well. As you have rightly put it, the rate was 30% previously before the COVID measures, and that has been running since April to December, as you have put it, and the government found it prudent to take back the rates to 30%, given the, what do you call them, the obligations of the government. So I guess that was a Treasury decision, and as KRA, what you do is to implement the law as it is.
Yes.
And true, as you've said, if your counting period ends before 1st April 2020, and that is when we saw the change of rate, then it would only be practical to apply the 30% tax bracket, the corporate. And you could see that if your counting period will now end after 1st of April, and this is when now the measures were put in place, there was a coming into law of the 25% tax rate through the Tax Amendment Act. And again, if you are doing books and you find that your counting period between April and December, then again, we apply the 25% taxes. So the contention was what happens after 1st January, the rates have reverted back to 30%.
Yes.
And you could see most of the businesses were running in a period where the turnovers were a bit impacted by the COVID situation.
Yes.
And you could find that it would, quote unquote, be unfair just to apply the 30% rate while most of the business was under such conditions. And that's why we see the two rates applying for counting periods that end after 1st of January 2021. You could see if part of your income was earned between April and December,
yes,
then as KRA, then we found that the 25% rate would be more applicable because that is when the business was running, that is how the turnover was earned. But come 1st January, I mean, the implementers of the law expect us to implement the 30%, and that's why income that is earned after that period then again goes into the 30% tax bracket. So I could imagine how the taxpayer is feeling.
Yes.
But I think this is something that was discussed at higher levels in Treasury, and we implement as is. So the notice was just to demystify that and to kind of put things into perspective for the accountants. One thing we want to mention is we are assuming that income is accruing equally across the accounting period. And just for ease of computation, then we would expect the taxpayer to have to prepare the statement as they've always prepared, have your income, have your expenses, determine what is taxable. Once you have determined what is taxable, then spread that. If it falls between April and December, apply the 25%. Whatever spills over into 2021, apply 30%. So that is how we expect for it to work. And again, I can see you're up to date on the system enhancements. So that is true. That is something that has been picked up with the audit firms, and they have brought the issue up with policy.
Yes.
And yes, so our team is working on making sure that the system is picking the rate as per the public notice and as is expected as per the provisions of the law.
Pretty much. Linda, I gotta ask you, I mean, is there any application that any corporate can make not to get into the 30% once the accounting period commences? Is there any situation that will make any corporate apply to still remain on the 25%?
Simba, I wish I could say that was possible. But the exemptions are in the first schedule of the Income Tax Act, and you will find if your income is not exempted, then you are expected to comply with the rates. Yeah.
Yes.
Yeah. So, and in 2020, we saw a number of deletions. So I think that is a part of government's, initiative just to collect more taxes and to get more people into the tax bracket. But there is no specific exemption for individuals that can apply to remain, in a previous rate. No, it's once the law changes, then we expect then the applicable rates to apply.
Yes. All right, Linda, I gotta ask you this now. I mean, you like to think that corporation tax then would perform on a high, but if we look at the data that we have for ourselves this morning, if you look at exactly how it is, it doesn't perform pretty much on a high. I mean, if you go back to 2015, 2016, we're talking about 13.41% of your revenue, 13.68% in 2016, 2017. We're talking about 12% in 2017, 2018. And in 2018, 2019, we're talking about 11.43%. For someone who's looking at that data, what would you say is, what does it vary across each financial year?
Corporate tax is an interesting tax, and I'm looking at your tables. If you look at it, it's kind of averaged out at around 12%.
Yes.
Which is, it doesn't show major dips or major spikes, because interestingly, even during this COVID period, based on data, which I think is yet to be released,
yes,
you will find that corporate tax was not very much impacted by COVID-19, interestingly. As you would expect, in things like the consumption taxes like VAT and excise, then that was greatly affected because, consumption with curfew, then guys are not consuming as much, say, alcohol as they used to, and what we're collecting in terms of excise is affected. VAT rate also changed, it was lowered. So those were our taxes that were directly hit and pay as you want.
Yes.
With corporation tax, it contributes to about 10% of our total revenue carried,
yes,
and for domestic taxes, about 15%. And from our statistics, you can imagine, then corporation tax has not been majorly impacted by COVID. And by the time the figures are being released, then you will see from your graphs that the average, it's still maintained the average of about 10%. So I think mostly because the banks supported that, if most transactions are being conducted virtually or online. So you'd find that because of these online transactions, that sector performs very well, and when it performs, it translates in as the other sectors did not do so well. But you see what contributes to the revenue basket of the corporation tax mostly is the finance and insurance sector. So that is why you find that even with COVID, then it was not a major dip for corporation tax.
Yes.
And I think the statistics will be released, and we will get to see that. But that is so far the status of the corporation.
All right, Linda, as we clear this morning, what would you talk about how important corporation taxes to the taxman's revenue?
It is very important. I have just the percentages that it contributes into revenue collection.
Yes.
And we're looking at industries where, especially like food and accommodation industry, and industries like tourism, and that the sectors that have been really negatively impacted by this COVID situation, and we really feel because whatever revenue basket essentially goes into government, into the services that are being offered, and whenever there's a dip, then you will find that even the commitments that we have as a country to repay debts will not be met, or we need to restructure that we're able again to, to meet that obligation. And that's why you see a lot of negotiation between the government and the foreign governments where we've borrowed. So there's a very huge impact on how it contributes. I mean, we've had to restructure our debts. We are hoping that the sectors will pick up because we need people back into jobs, and so that, taxes such as Pay-as-you-earn can pick up.
Yes.
I mean, VAT can also pick up. So it's with corporation tax, it has, because of its stability, it has helps the domestic taxes department and KANYARI kind of maintain its revenue collection, and kind of not meet target, but is moving towards meeting target. And tax stability has really contributed to our revenue basket, and it's because of corporation tax that you find whatever we are projecting has not been badly impacted by the COVID situation.
Pretty much. Linda, thank you very much for taking your short time this morning to speak to us here on Metropole TV on those new dates and accounting dates for corporation tax, which is now at 30%. Thank you very much.
Thank you as well, Simba. It was a pleasure.
It was a pleasure. All right, now let's jump into the next part of our discussion this morning, and it's essentially on those Q3 numbers. All right, let me jump to the data that we have for you this morning so we can look at the biggest contributors to that recession that we were in Q3, and I also talk about those contributors to that growth that we are talking about in Q3. All right, let's jump therefore and look at that data in terms of the ones that contributed to our growth: construction 16.2%, agriculture 6.3%, financial services insurance 5.3%, transport and storage 2.9%. Good. Let's therefore move on and talk about the ones that contributed to that recession: accommodation and food services, negative 57.9%. Manufacturing, negative 3.2%. That bigger drop is why I really want us to pick from this morning, and to help us really therefore go through that biggest drop in terms of that recession, we're joined by MACHARIA, CEO, Kenya Association of Hotel Keepers and Caterers in Kenya. Mike, can you confirm that you can get me, sir, this morning?
Yes, Simba, I can hear you clearly.
Fantastic.
Good morning.
Fantastic. Good morning. All right, Mike, it is just Q3 numbers. Good. We still don't have Q4 numbers on the table for us, and it's still 2021. Fine. But let's talk about that as well. Hotel accommodation, as expected, the industry has been heavily hit in Q3. Negative 57.9% was the biggest contributor to that recession that we experienced in Q3. Question is going to be, I mean, we're coming from Q3. We do expect that was going to be the trend, but are we going to see the same thing in Q4?
Yes, Simba, it is highly likely that the trend will be the same in Q4.
Yes.
Mainly because international travel is still not back to its capacity. We've seen a bit of activity in the domestic market, especially in this for the coast and places like Imara, Naivasha, Kisumu, going up north in Nanyuki and the Samburu area.
Yes.
Some very good domestic numbers.
Yes.
But given that Nairobi was mainly the main contributor to tourism in terms of conferencing, then that number is likely to stay static or even become a bit worse. We had projected to finish at around 70% on the negative. So it's a bit, it's still not yet 60.
Yes.
But we do expect that the trend will continue downwards until it's still from bad to worse in our markets. We are encouraged by the fact that the numbers are not very, very bad in Kenya, but in the key source markets, our main market, the US, the UK, Germany, Scandinavia, France, Spain, we are seeing a recent spike. From an international perspective, it still take a bit longer to recover.
Yes. Mike, I want to take you back again to 2020. I'm talking about the last quarter announcements that we've been getting from CBK. They were saying that, well, if you look at that specific industry, then even the number of hires were going up by a certain percentage. But from what you stated this morning, you're negating that statement by saying that, well, it's going to get worse as well. What has changed from the last quarter of 2020 to where we are right now in 2021?
What's happened is that I think CBK is giving a general overview.
Yes.
Of all the sectors lumped together.
Yes.
And when we look at there are some sectors that actually did quite well, even during lockdown.
Yes.
You look at the telecommunication sector, the digital space, banking did not suffer that much because of the policies that were put in by CBK. You remember the reduction of the CBR rate and the CRR twice within a month, freed up quite a bit of money so that the banks could be able to lend. I think about 34 billion was freed up by just that one action.
Yes.
So banking as much. Now, when you take the tourism and hospitality industry in isolation, that was really, really affected, and mainly because, number one, the social nature of the industry, where people have to travel and people have to meet, they have to link with one another, and this is what scientists were telling us not to do. Secondly, the lockdowns.
Yes.
We had a lockdown in Nairobi and Mombasa for a period of about 5 to 6 months, and we had no international air travel, even local, for a period of about 5 to 6 months. And that came right in the middle of the so-called high season. So what we lost around that time, you could not be able to recover in the final quarter. We missed out the entire migration period, we missed out the entire summer period, and missed out key season time in the industry. Then you have the curfew. The curfew started at 7 p.m., which restricted us to operate at all in the entire hospitality sector. Then we got a bit of a reprieve when it went up to 11 p.m. that you could now be able to serve lunch and dinner at the facilities people would get back home. Then we saw a bit of a spike in November. The curfew was brought back to 10 p.m. So it means that now the dinner service is no longer available because you're supposed to close at 9. So if you're leaving work at 5 o'clock and you're making your way through the traffic and you want to have dinner with the business acquaintance before it's too late, between the time you leave your place of work and you fresh and come back. So if we maintain the curfew at 10 p.m., the industry will continue. Now, what is dual reopening of certain sectors? The key one is education.
Yes.
We are able to then open up. We are able to let people go back to their places of worship in churches. We are able to have small function roles with 200, 300 people. Then it's also about time about this hospitality area that we are blocking. That is a very, very key part of the economy. Because as long as you don't have that evening service and the 24-hour aspect of the economy, we will still continue to suffer.
Pretty much. All right, Mike, let's look at another area as well. I mean, that's also another conversation point. You like to think, therefore, that we would have seen the effects of whatever the government did just to get you out of the grips of the coronavirus pandemic, that to some sense they would have had the effect in maybe the last few months of Q3 or Q4 as well. Would you talk to me about that economic recovery package? I mean, we could be getting some news about it right now, and if any effect was felt at all in Q4.
Yes, Simba, the government did quite a lot.
Yes.
You remember there were some very deliberate actions by government to support industry.
Yes.
And some of them you mentioned when you're speaking to Linda. The reduction of VAT, the reduction of pay-as-you-earn, the central bank rates going down.
Yes.
We had government committing to pay back VAT. A conversation that we have had for many years, and they did. We had our pending bills in the tune of about 800-900 million were paid to support cash flow. So generally, the government actually did quite a lot within that time. They even lifted the circular that prohibited government meetings to go into private facilities. So we did see quite a lot of action in the initial period, and it was supported, and
yes.
And that is really never seen. That was the first time that we've seen any government reduce VAT, even by 2%. It was a very bold step by the president, and that we appreciate. The only thing is that for tourism, the bounce back is usually not as quick as in other sectors.
Yes.
Because to get people coming back, every time we have a crisis, it takes a cycle of about 6, 7, 8 months from the time we start the recovery process to the time we recover. We about 7 to 8 months. So what we would have liked to see a bit of a maintenance of that stimulus package into 2021.
Yes.
So, for example, I'll give you an example. When we were under lockdown, most of our people were not earning money. They were either on unpaid leave or on. So the issue of PAYE, even though it had a huge impact on other sectors, it didn't impact us that much because we were not earning anyway. So when we start earning, when our people and there's wisdom in what the government is doing, because we must appreciate that for government to continue giving us services, we need to pay our taxes. The government needs to earn, to put it plainly. So it's a bit you're caught between a rock and a place. But we would have wanted the stimulus package, particularly the VAT,
yes,
to go on at least until the end of the government financial year in 2021.
Yes.
Then review after that. So that's where we are. But if we are able to open up and we are able to earn our keep, the industry is quite resilient. We can come back, but now that's first of policy about PCR testing, the issue of the vaccine, and it's not just our own government policy, it's also foreign government policies. You find that the places where COVID is ravaging countries are the ones that are putting travel advisories against a country like Kenya. For example, if you live in Kenya, to go to the US, you have to go into quarantine. If you're going into the US, quarantine. It should be. So we are looking at some, and also a bit on the bilateral side, yes, with the other countries, because we don't, as Kenya, we feel that we've been able to control the pandemic. We've been able, through our government action, to keep the protocols. We know the rules. We've generally, as a in that reported every day by the CS. So we do need a bit more support to try and jumpstart the industry from an international perspective.
All right, Mike, as we clear this conversation this morning, it's my last question for you, Mike. I mean, well, what everybody's talking about is that the other sectors in the economy are settling. They're sort of finding ways to operate within the COVID-19 pandemic. And that's why everybody's saying, well, despite the curfews that we're talking about right now, that there's some sort of optimism when it comes to the performance of the sectors in 2021. They're calling it finding a way within the pandemic. But now, Mike, I want to ask you this question. Yes, taxes are back to where they were. We're not talking about 14% VAT. Now we're talking about 16%. Corporation tax is back to 30%. Pay as you earn is back to where it's supposed to be. And we're talking about a high rate of inflation again as we start 2021. Is that spelling doom into your industry again in 2021?
In the sectors that you mentioned, Simba,
yes,
mainly the export, because the exporters are able to load their tea and send it out to the source markets.
Yes,
fly exporters are able to export. The sectors that you will look, even looking at your chart, the ones that are negative,
yes,
tourism, hospitality, which is an export in a way, and manufacturing. You'll find that there's an impact of manufacturing. So in the long run, there will be an impact on manufacturing and a bit on agriculture, because we think of ourselves as a consumer from this industry. So we consume a lot of what is manufactured locally.
Yes.
Take a company like Choice. When you're having breakfast in your house, you might have one product from Farmer's Choice. You might have bacon, or you might have sausage. When you go to a hotel, you have all this layout of multiple products from the same company. So you'll find that a company like that, manufacturing for local hospitality consumption, will suffer. You take an example of a company like Coca-Cola, even EABL, the ones that will supply. They are also experiencing a negative growth. So, and to a certain extent, agriculture. Because we also consume a lot of vegetables, the meat, everything that comes from the farms, and even areas like cleaning, soaps, detergents, electricity. You'll find that these areas of manufacturing will be suffering. So what we need to do is, first of all, as government, we need to take a lead in the vaccine policy.
Yes.
Because you see what we did very early in the pandemic, the mask policy, the lockdowns, it is something that we did, and as government, we took those key steps to slow down the virus. This is what now other countries are doing now, 1 year down the road, something that we did a long time ago. So Kenya can take a lead in directing the vaccine policy. Who gets a vaccine? When you have a vaccine, then can you travel? You need a PCR test. We can be able to do that so that we encourage travel. And we can start within the region, and then within Africa, and then on the international front. All we need now is give us that one more hour. We can sell our dinners, and we can be able to get our staff home. So if curfew is reviewed to 11 p.m., that would, instead of us going back money, let's let's earn it. The government is already giving us money for renovations. We already have a 3 billion fund that is already being disbursed to our members. For us to take full advantage of that package, we need also to stay open.
Pretty much. Mike MACHARIA, CEO, Kenya Association of Hotel Keepers and Caterers, thank you very much for taking your time this morning to speak to Metropole's Business AM.
Thank you, Simba.
All right, on that note, we take a short break, but once we come back, question is going to be, do we need a new tax policy in the country? Now, certified public accountants of Kenya are saying what we have right now is not working for us. Do you agree? Do you not agree? Once we come back here on Metropole Television.